Hello everyone, welcome back into XLpips video. And in this video, I'm actually going to talk about the XL Charter Public Mentorship. And this is the third episode, okay? And we are going to talk about why you fail with Smart Money Concept and ICT. And here I'm mostly going to cover up the liquidity and inducement traps. So this video is going to cover everything you need to know about inducement and liquidity, and also how you can actually differentiate these two, because most people are actually getting confused, like what is an inducement and what is a liquidity. Okay, so I'm going to cover it, and don't forget to like this video, comment, share, and also most important thing, don't forget to subscribe. Click that subscribe button there. It doesn't cost anything, just a matter of clicking the button, and you're going to support this video. Okay, so let's continue with our tutorial. And first we need to talk about what exactly is liquidity and inducement traps. Okay, so here we start with liquidity and inducement traps. So many people are still failing in trading, even though they have already a good understanding of smart money concept and ICT concepts. So you may see a lot of people have actually watched a lot of inner circle trader videos, everything. Then they have actually summarized and the written notes, and they know everything about liquidity. They know about breakout structures. They know about fair value gaps. They know about breaker blocks, mitigation blocks, and everything that is there in the smart money concept ideas. Okay, so they know a lot of things and they already know everything, but still they're still confused when it comes to executions. I've been teaching a lot of students, and they have been actually telling me the same problem. Like they all complain with one thing, like whatever they mark their entry points, price tends to sweep, take them out first, hit their stop losses, and then moves in their desired directions. And the only answer I always tell them is it's because they have the lack of understanding liquidity and inducement concepts. The way they are actually watching price, the way they're analyzing from the higher time frame, that is where the source of the problem starts. The source of actually trading areas that are going to be weak and not strong starts from the higher time frame. Okay, so I will show you a live trading analysis on how you can actually get confused on the higher time frame, especially when analyzing from the daily and weekly. A lot of people are not actually knowing how to use the weekly and the daily time frame in order to create a very strong directional bias. So I will show you in the example, but right now let's talk about the concept of liquidity and let's get the understanding of it. Okay, so for you to become a profitable trader, you need to master inducement and liquidity before pressing any trade. So don't become somebody who actually forces to make money, quick money, hit a home run by actually trying to execute when you know, like, you don't have enough data, you haven't collected enough data for several months. You want to actually just become a profitable trader by just watching one video. Maybe this video, somebody may say, okay, let me watch this video. After this video, I'm going to actually go back into my pro forma account or to my personal account, and I'm going to start trading. No, don't do that. The first thing that you need to do is to back test. You can actually use the free trading view plan, or you can just purchase the basic or the pro plan from trading view, and then you can start back testing everything that I'm going to share here. And I'm just going to tell you that if you take enough time to back test, collect data, journal your trades, and see the progress after from 2 to 3 months up to 5 months up to 6 months, if you are patient enough to actually master this game, you're going to actually become profitable. You don't need to practice for just 1 week. Some people just want to make money very, very fast. They have debts to pay, they have bills to pay, they have maybe school fees and college fees to pay. But the real issue is, this is not somewhere where you make quick money. If you want to make quick money, maybe just go and bet there, but not here. In trading, you need enough time. You need to collect time. You need to have the real experience from the chart to go through the ups and downs, emotional roller coaster. Okay, you need to go through that and see and win it and master it, master your emotion, master the way you are trading plan and everything. Okay, It's not going to be something easy. So you need to take enough time to practice, okay? Especially the concept of liquidity and inducement, which is a very important part. Many people don't take enough time to master liquidity and inducement. They just want to see like, oh, it's all about trend line. It's all about equal highs. It's all about swing highs and swing lows. But you don't know. We need to actually implement also the concept of time in order for you to know like, okay, liquidity goes direct to its time. So I need to actually master by actually backtesting, by actually watching the market, by actually demo trading. Okay. So let's start with what is an inducement. So inducement occurs at a specific point or zone in the market where traders believe it is the correct time to enter a trade based on their analysis and trading system. So we have different strategy. We have different concepts. So all of those concepts and strategy, remember that they all of them, there is a concept of liquidity. You can't hide that, the concept of liquidity or inducement, okay? So you need to make sure that you actually master inducement and liquidity in order for you to master your strategy, whether it is trend lines, whether it is Wyckoff, whether it is CRT, whether it is whatever, like BB, TMM, I don't know, whatever strategy, okay? Even those indicators, you need to make sure that you have the understanding of liquidity, because liquidity is the fuel of the market. So you need to master liquidity, okay? So most traders, they may find themselves like they have marked maybe a certain area of interest or point of interest, and according to their strategy or their trading system and analysis, they believe that this is going to be the correct time or the correct point for me to take an entry. But it becomes an inducement. Why? Because that area was not the valid point for taking entries. Because why? Because that area was an inducement area. Okay, so you need to know what is an inducement area. How can I see the inducement area? So because if you really know where liquidity is, where inducement is, that's going to help you to actually know where is your valid point of interest. Okay, where is your valid order block? Where is your valid fair value gaps? Where is your valid breaker block? And whatever kind of entry model that you use. Okay, so if you have you are actually somebody who has actually marked a certain specific point or zone in the market, and you believe that's the correct point for you to take an entry based on your analysis and trading system. If the market sweep it, if the market takes you out, it means the central banks or the financial institutions or the smart money use those zones, okay, to fall traders, the retail traders, into trap. So it means that that area is going to become a trap. Okay, it's not going to be an area where you're going to do what? You're going to take your entry. It's going to be an area where there is going to be a trap. Okay, so you need to be very careful when you're actually looking for your point of interest. Okay, we will see where are those areas that we expect them to become inducements. Okay, we will see. So let's continue with where can you find inducements. Okay, where exactly can you find inducement? Because we have already learned about inducement. What is an inducement? Okay, we now know like it's an area where people believe that is their correct area for them to take entry. Is a correct place for them to actually execute, because according to their strategies and analysis and their system, they believe that that's going to be a good area for me to take an entry. But that point is going to become an area that's become a trap. That's going to actually make the smart money or the big bank or the financial institutions sweep that area before they move price in the desired direction. And this is the reason why most traders end up getting stopped out before price goes in that direction. It is only because they don't know, didn't master inducement. So you need to master inducement and liquidity in order to know those traps, in order to actually wait for those traps to be taken first, and then you can look for your entry. Okay, you need to wait for liquidity sweep first. Now, where can you find inducements? That's the most important thing that we need to discuss. Okay, so the first thing is you find inducement where there is order blocks, where there's support and resistance level, where there is swing levels, and where there is trend lines. When you talk about swing levels, you're talking about the swing highs and swing lows. Okay, you can say swing points. Okay, so now let's talk about order blocks. We call it order blocks when you with Jamaican style. Order blocks. So order blocks is demand and supply zones that when price reaches them may potentially change the direction to the opposite direction. That's an order block. Okay, Other people define it as the last opposite candle before price create a momentum shift, before price breaks structure, before price leave behind an imbalance. So we mark the last opposite candle before that impassive move that left behind an imbalance and broke structure. That's an order block, the simple definition, okay? So how comes an order block that we expect price to actually bounce from, we expect price to react from it and goes to that opposite direction that we desired? Why does it become now an inducement? Why does it become an area where we expect traps? So it's because of these three reasons. The first reason is the lack of momentum, okay? When we lack momentum, like when price doesn't show us the true momentum, we know momentum, we're talking about big candles being created, okay, large candles being seen in the price. And those candles must actually create block of structure or market structure shift, okay? When we lack that momentum, that's the first sign. The second sign is the missing criteria. You know, in part of the criteria of an order block is the presence of a fair value gap or liquidity. So if we lack fair value gap in that momentum candles, in those big candles, in that movement that created maybe blackout structure or market structure shift, if we lack the fair value gap, or if we lack liquidity sweep, that means we are missing that criteria of a strong or of a valid order block. So it means that order block is not going to be able to hold price. Price is not going to bounce from there, but price is going to sweep it. Price is going to run below it or above it, depending on the direction of the market. Okay. So the third thing is the price leg that filled the fair value gap. So if you have a price leg that actually filled the fair value gap and went in another direction, in the opposite direction, so it means that fair value gap was actually filled, but price didn't touch the order block that was below that fair value gap. So it means if price goes higher, it means at a certain time in near future or in the next few candles, next few hours, price is going to return back into the same area and sweep that leg that filled the fair value gap and then goes down to that or into the upside to that order block and tap into that order block and bounce from it. And that's going to be your true movement that you were supposed to take, but not that movement that actually filled the fair value gap. So if you took an entry on a fair value gap fill, it means make sure you put your target not so far. Just take 1 to 2 risk to reward ratio. But make sure you close your trade as fast as you can before price starts to reverse, because the moment price starts to reverse, it's going to reverse aggressively and it's going to sweep that leg that filled the fair value gap. That's that low that went down and or up, and depending on the direction. Okay, I'm talking about the bullish market. So if we are bullish and we had a bullish fair value gap being filled, we expect the price to return back, sweep that low or sweep that leg that filled the fair value gap, and then tap into the order block below it, below that fair value gap. Okay, so let's see the examples, okay, from one of the charted examples here. So you have this lack of momentum. Look at this, it's very simple. You can see everything here. Okay, you can see everything. So let me show you some of the examples of how I would say like we are having the lack of momentum. So you can look at this chart here. Look at this chart. You see we had some, like, price was not strong enough to push price high. Okay, price was not very strong enough. Let me show you. Let me delete first. Okay, let me delete this. Let me show you. Yeah. Okay, sorry guys, this is the example of lack of momentum and how it affects decision on taking trades. So look at this example here. Okay, so if we look at this chart here, you can see price was not showing the willingness to either go higher or to go lower. We had some form of consolidation, a ranging market. Okay, but that ranging market is not very, very clear, because if you are actually somebody who looks for entries very fast without taking consideration of the breakout structures and market structure shift, then this is going to be something that's going to make you go through losses. Okay, so look at this. If you look at this closely, you can see price pushed higher here. Okay, we had this push to the upside. Okay, this was the push to the upside. This was the push to the upside, this one. And you see we had these big candles, but what we can see here is that we had this fair value gap down here. Okay, see that fair value gap, but price filled it very fast. We didn't have an opportunity for us to take an entry here. And what happened is that we formed this equal lows. Okay, this equal lows. Okay, we had some form of equal lows here. And then price left this fair value gap here and another fair value gap there. Okay, but then price went up. What happened here is that we didn't break this. There was no break of structure here, because this was the last swing high. We need to take this high for us to confirm that we are strongly bullish. But what happened is that price just tried to fill this inside fair value gap, this internal range liquidities, this inside fair value gaps. Okay, try to fill them, and you can easily see here. You can easily see. Okay, let me just delete that. You can easily see here. What happened here is that price went up a little bit up to this level. Price went up to this level, okay, here, but didn't take this high, which was supposed to be the one that was supposed to be actually our break of structure. Price didn't break structure here. What happened? Price just ended here. It means we are still inside this range, inside this swing high and swing low. Okay, we are still inside this swing high and swing low, which means this is not a good point for us to take any entry. You can see this fair value gap, which becomes an inverted fair value gap. For someone who wants to execute here very fast, that's going to take maybe, okay, let me look for buy here. When price comes down, you see this area here. It's going to be your inverted fair value gap point for you to take a buy. But this is not a strong time for you. It's not a good time. Why? Because structure is very weak here. The structure is consolidating. The structure is ranging. We don't have the true push. We don't have the momentum like this, like price showing break of structures for us to say, okay, now we can look for buys. There is no any strong momentum here. We have a very weak momentum. Price is just ranging here. So even if you see this inverted fair value gap as one of your point of interest for you to take an entry, this is going to make you lose money. You're not going to win money in the long run. Okay, you're not going to make money in the long run. So it's not going to make you any profits here. You're just going to become somebody who's going to be liquidated. Why? Because this area here is an accumulation of orders. The smart money, the big institutions are actually collecting, making sure that a lot of people are actually getting interested with this area. Why? Because there are people who are trading support and resistance. There are people who are trading maybe inverted fair value gap like here. Okay, but we don't have any clear push to the upside, any clear momentum, any strong momentum. We don't have strong momentum here. Okay, let me show another thing why this area is still dangerous for you to take any trade. Look at this area here. You see here, we had this break of structure. Okay, after price came down, we have this break of structure. But remember, even this break of structure is still in the minor structure. It's not a major structure. Okay, this is the minor structure. Why? Because it is inside. This is ranging between this swing high and this swing low. Okay, we don't have any clear movement of price here. Okay, still we are just ranging. So even if there is a break of structure inside this range, it means it's still a weak area. Okay, until we break above this high or below this low, that's going to be an indication like, oh, now we're seeing maybe some buyers are now controlling the market, or sellers are controlling the market, but not right now here. We are ranging. Even if we have this break of structure, something that is missing is the fair value gap. We had this here. Okay, we had a fair value gap here, but price came down here, filled it, okay, and tap into this order block. Okay, so now someone may actually say, oh, okay, now this is the good point for me to buy using the order block and the fair value gap. Another type of traders that are going to be trapped in this zone, because someone may take a buy here now, but remember, we are still inside the range. So even if you take your entry here, price is not going to show you any true movement because we are still in the range. Okay, the accumulation of orders is happening here. Smart money collecting orders of many people, trying to create traps for many traders, for them to get interested. So the support and resistance guys are going to be interested here. The people who trade ICT and smart money concept without having a clear trading strategy, they are going to take entry here on this order block and this fair value gap fill. So you see prices again, price start to consolidate. Okay, giving a lot of rooms for other traders to get interested here. Okay, let me take a buy here. Price is showing the interest, price is not still moving. So even if I take a buy from this point, I'm going to be inside this trade. I'm going to make a lot of money. So a lot of people are going to be interested here. Okay, but then again, price show this weak breakout structure, okay, which is not a breakout structure, which is just a liquidity, okay, or we can say it a turtle soup here. So a lot of people are going to be interested with selling here. People who are not having a clear direction bias, they are going to be interested with selling here on this turtle soup because they see, oh, price has just created a turtle soup here, so I can look for sales. So if they don't take this trade from, they don't take a trade from this turtle soup, they are going to look for entry on this what, on this fair value gap. It's going to be interested. They are going to be interested on that fair value gap. Okay, let me take a sell from this point, and I'm going to target maybe this swing low. Okay, I'm going to target this swing low. Okay, as my point of actually of taking profits, but that's not going to be the thing that you're supposed to take because you're still inside the range here. Still, there is accumulation of orders. Smart money, big institutions, financial institutions, they are just trying to create more traps for many people to get interested and to put more orders here. What happens? Price will go down a little bit, and it will take this, it will sweep this, creating what? Another form of turtle soup here, okay, which is now a point where price is actually showing the movement here. You see, after this, those people who will look for buy, okay, they're going to see this, okay, they're going to see this price will go higher. But remember, those who look for buys and sells, all of them are going to be trapped in this movement because people who are looking for sell here, okay, who decided to take a sell from there, from here, okay, all of them will be taken with this aggressive move to the upside. But again, you see, now this is where we create a breakout structure. The major breakout structure will happen here after price push to the upside here with this strong leg, okay? This is the one that's going to create the breakout structure because we are going to break above this swing high and we are going to create a strength for what? For buyers. Now, those people who are actually tracking sales here or using this concept of turtle soup and fair value gap here, they are going to be taken out. But then again, those people who were looking for sales after being taken out, remember, a lot of people now are going to be interested with what? With buying. At what area? At this area here. Let me show you. They're going to be interested with what? With buying. Okay. Immediately after they have seen price creating this breakout structure here. Okay. After price took this swing high. Okay. Many people are going to be interested with buying. So they're going to use this order block for buying. Okay, let me delete this here. Let me remove this here. Many people are going now to be interested with what? With this order block. They're going to be interested with this order block here. The last bearish candle before an passive move to the upside that created a breakout structure and they left behind imbalance of fair value gap. So they are going to be interested with this. But remember one thing, at this area, we are inside a ranging market. We are inside a consolidation. And this is not a good time for you to mark your order block. Why? Because you are still under the area that is accumulating, the area that is still not showing the strength of the market. We need to see a clear push to the upside. We need to see a clear market structure, okay? Not this area that below, you see, we are still in this what? In the trap. It's still in the trap, okay? Look at this. As I've said, okay, we had this one here. Read this form of equal high there, okay? That's an equal high down here. So we have the equal low, not equal high, the equal low here. These two here, these are equal lows. So it's still down below it, there is liquidity. So if you're going to be somebody who is going to mark this as your order block and expecting price to bounce from this order block, you're going to be taken out of the market. You see this leg here, very strong leg, very passive move to the downside. And this is what took this equal low here, which was the liquidity. So it means even those who are looking for buys after seeing price creating this momentum movement to the upside and creating breakout structure here, these people are going to also be taken out of the market. So it means the market is creating traps and taking out a lot of people's orders, okay? So believe me, what I'm telling you, if you have to understand, if you want to look for a clear area for you to take interest, make sure there is no lack of momentum. Make sure there is enough momentum, okay? Not this kind of traps, a lot of consolidation ranging and price failing to create a strong breakout structure, price creating to take a previous high, price just keeps on ranging and not showing you true movement. It means you need to be very careful. Only trade where the market conditions, okay, all of them are very good, okay? Not where there is still liquidity and where there is no clear breakout structure, where there is no clear formation of fair value gaps and whatever, okay? So that's just a simple explanation. Okay, I just wanted to share with you. And I want you guys to be actually listen very carefully to this video, because I believe after this video you're going to be a very good trader. Okay, you're going to master liquidity and inducement. Okay, now let's take another example. Very beautiful example. Okay, this one, the one that we're going to show momentum. Okay, how do you see the momentum? So okay, let me do this. Okay, there we are. So this is Aussie USD. Okay, 15 minutes time frame. You can see here what I mean when I talk about a momentum. This is where there is momentum. Why? Because look at how price was moving. Okay, you can see we saw this, what we say downtrend. Okay, price was moving to the downside, right? And then right here we had this kind of, the last lower low was formed, the lower low was formed, lower low, lower high, right? Lower low, lower high, and then price created this new lower low, and then we had this lower high. Okay, that was another lower high. But then what happened here is price created this failure swing. Okay, we had a failure swing there. I don't think if you see it, you have a failure swing here. Price didn't take the previous lower low. Okay, this is the failure swing, which shows an indication that sellers are losing control. Okay, sellers are losing control. So if sellers are losing control, that's an indication that anytime we can see an expectation of price shifting structures. That's why you see what happened here is that price didn't respect this lower high, the last lower high that was created. That's why price swept it, and we had a clear market structure shift there. A first indication of market structure shift. That is when this area here becomes our sell side liquidity. Okay, immediately after price create a market structure shift here, this last break of structure that was created by the selling movement becomes our sell side liquidity, and now we have market structure shift here. So you have market structure shift. Look at this movement. The two very big high momentum candles. They have a momentum. Okay, they're aggressive candles. They are pushing with big candles. That's why you see we left this fair value gap here. Very clean fair value gap. And where we have this fair value gap, it's the same area we have this what? Mitigation block. This green candle is our mitigation block. Okay, so a fair value gap and the mitigation block, they are overlapping, which means this is now our ICT unicorn model. Okay, it's a very strong point for you now to take your buy. Okay, and you may target this lower high here as your first take profit. Okay, so if you're going to look for your entry, you can take entry from here. You see this tap here. This was our point for us to look for buys. Okay, so you see we have a fair value gap, we have a mitigation block, and we have an order block also. All of them at the same price, all of them at one price, which means more confirmations. We have more confirmations here for us to take a buy from this area. Okay, so this was a very good point, for a very initial point for us to take a buy. Immediately after that push, you can see we have created another break of structures there. Okay, after that break of structure, you see price came down there, tap into this order block, okay, and went high again, created another break of structure here. Okay, and again we see price went going higher, and we had this major break of structure. There's strong indication now we are buying. So if you are having some worries to take your buys from this area here, if you didn't have enough experience, okay, if you don't have enough experience, with actually trading these zones here, okay, down here where we have market structure shift, to have the initial change in the direction of the market, you can wait for this major break of structure to be broken. Okay, so we have major break of structure here, which is like a major change of character, or major market structure shift. Okay, and if you look, we have already mitigated the first order block, the second order block, so we have the third order block here. Okay, let me remove this. So we have the third order block here, this one here. Okay, that's our third order block. That's still unmitigated, but the lower ones are already mitigated. So, and if you look closely, you can see we have the fair value gap. Okay, we have a fair value gap there. And if you remember, one of the second The second reason why an order block may fail is one of the reasons is a fair value gap, a leg, the price leg that filled the fair value gap. You can see here, we filled the fair value gap there, okay? You see, this leg is the one that filled the fair value gap. So if you're going to look for your end, don't use this as your order block. Don't use this as your order block. Why? Because below it, there is an order block. And also there is no clear break of structure there. So don't use it. And you can see what happened again, price created this. So it became like a trap. This was a trap with trend line. One of the examples of what? For an inducement is a trend line. Okay. So if you are expecting price to come and bounce on this trend line for the third time, you're going to actually end up losing money. Why? Because price is not going to respect it. Why? Because there is an order block down here. There is this discount order block. This discounted order block is going to be the one that's going to hold price, and price is going to bounce from it. It's going to push more higher. So that's why you see price came down very aggressive with this news candle, okay? High impact news candle. Tapped into this bullish order block, and this was your best time for you to take a buy. That's why you see after this price went high and we targeted this buy side liquidity area as our draw on liquidity. And that's what happened. So you need to deal with the momentum. Make sure you watch. Make sure you wait for momentum. Okay? Make sure you wait for what? For momentum. Don't just execute. Be careful, okay? Make sure you wait for the momentum. Okay? So that was another example. So let's see another example. The price leg that filled the fair value gap. I've already tried to explain it. So let me explain it again about the price leg that fills the fair value gap. How come this is also one of the reasons making your order block an inducement, okay? Making that order block a weak point for you to take a buy or to take a sell depending on the direction of the market. So you can see on this Audi JPY 15 minutes time frame, you see what happened is we first had this turtle soup price just swept this with the wick of the candle. And what happened after liquidity sweep in form of turtle soup is price went higher aggressively with the momentum and created this market structure shift here. Price took this lower high, this last lower high. Okay, remember this was the lower low, this was the lower high. So the lower low was taken with the what? With the wick, became a turtle soup, and then immediately price reversed to the upside and ran above this lower high, which is now an indication of market structure shift, or what we call change of character. So after that, you can see price left behind what? Fair value gap. The fair value gap down, the lower fair value gap, which is what we call the BC, the buy side imbalance and sell side inefficiency. And again, left another fair value gaps, the same BC, okay, the buy side imbalance and sell side inefficiency. This is another fair value gap that was left. So, and then we had this bullish order block here that was created. So we know price has to come down into this and what tap into this order block. But what happened here is price just first price filled the fair value gap. Okay, this. See this. Price came down into this. Okay, into this fair value gap. Okay, and after tapping into this, you see this leg here. Okay, this one is the one, this leg is the one that filled the fair value gap. So it filled the fair value gap, but it didn't tap into this bullish order block, which means we still have something that was not yet confirming us to take a buy. Because it's not only about filling a fair value gap, it's all about filling a fair value gap and making sure there is no more fair value gap that is left, and also to make sure that price tap into that order block, okay? But here you see price just filled this fair value gap, the one here, the higher one, didn't fill this lower one here, which is also overlapping with an order block. That's why I say if a price leg filled the fair value gap but didn't tap into the bullish order block, don't just execute without having a very good, without using enough risk management plan. So if you're going to take a buy from this leg that filled the fair value gap, make sure your stop loss is below. Okay, which means you're going to actually have risk a lot of money, which is not a very good risk management strategy. Okay, so it's better to wait for price to actually tap into your order block for you to have a very nice what? Stop loss. Okay, so you see what happened here is price went a little bit higher, like we had some weak market structure shift there, very weak market structure shift. So if you're going to expect this price, this order block here to hold, this, because this is an order block that was in the price leg that filled the fair value gap. So that's why I said this is also part of what? This is also part of inducement. So you're not going, you don't use this. If you use it, like what happened here is price came down, filled the fair value gap there. It doesn't happen to this order block. And we see this first candle, bullish candle. So if you're going to take your buy from here, you see what happened? His price just went down very fast. Take your stop loss, sweep this low, and then tap into the order block. You see how beautiful it is. It's very nice if you're patient enough to actually master liquidity. And that's why you see this tap, very good sniper entry. And price went high and high, and they tap into that draw on liquidity. So that's very simple. Okay, if you're master inducement and liquidity. Another example for the price tag that fills your value gap is this. Look at this. Okay, you can see here market structure shift. Okay, price came down into this area where the supply zone. We see tapped and then went higher. We had this break of structure there. Okay, after we had break of structure, look closely on what was formed there. Let me delete this first. Okay, you see this. This was the fair value gap there, and this one, this price leg, this wick here came down and swept this what? Filled, not swept, and filled this fair value gap. Price filled the fair value gap. But what we need to know is price didn't tap into our order block. You see that? Price didn't tap into the order block there. Okay. Missed the order block with few pips, very few pips. And went higher there. And then we had this trend line again being formed. Okay. You see what happened? Price just filling a fair value gap and creating a trend line. The same with what happened here. With what happened here on the first example there when I was talking about lack of momentum. I think. So you see, we had a trend line here, and this is the price is a price leg that filled the fair value gap. And you see what happened. His price swept it and tapped into this bullish order block before we saw this aggressive move to the upside. Okay, very nice. Another example of inducement is when we're talking about support and resistance levels. So look closely here when we talk about support and resistance levels. Okay, this area here was not a very good point for you, was not a very good time for you to take any entry, to take any trade here. It wasn't a very good time for you to take any trade here. Why? Because look at this. We first created this break of market structure or market structure shift there, we can say. And then price just, after creating this break of market structure, you see, we already tapped into this order block with this. This one here tapped into this order block. Although we didn't have a clear break of structure here or market structure shift, but price already mitigated this order block. So it is already a not good point for you to look for entries. Why? Because it may actually act as a liquidity next time. And then price went high there, you see, and created this break of structure here. Okay. But then we had this, when we are looking for, if we see this, we can say this was a break of structure there. Okay. And this was a major break of structure there. This one was a major break of structure. So we had this order block. Price came down into this order block, tapped into this order block, and started to go higher, then went down and swept this, okay, creating a liquidity sweep there. And that is when we see this momentum movement, okay. This was only time where you could have actually executed, okay. This was the only time that you could have actually executed, and your target was supposed to be this swing high, okay, where we have break of structure. This was supposed to be your buy side liquidity, your drawn liquidity. Okay, this was supposed to be your drawn liquidity, and you are supposed to exit the trade. And this was just going to give you a few pips here. Okay, but this is gold, gold has more pips, but it could have been your only time for you to execute. But if you missed this, if you missed the end execution on this order block, and also you missed the execution on this liquidity sweep here, then it means you are supposed to actually relax. Why? Because look at what happened next. We didn't have any clear reasons for us to wait for price to fill this fair value gap and tap into this order. We don't have any clear reason. Why? Because already we have created traps here. Look at this. Look at this. This is a trend line. You already have a trend line there. That's a trend line there. Okay? That's why I said the last time for you to take a trade was here on this order block. That was the last time. Why? Because after that, we just created traps and not point of interest. We just created traps. Look again. If you look again here, you may see. Look at this. This one was like some form of equal laws. Okay? Like some form of equal laws was formed again here. So you can't say now you can actually wait for price to fill this fair value gap there and tap into this order block. You can't. Because down below it, we have traps. We have a trend line there, and we have this form of equal laws. Now, why would you actually expect price to actually respect this area and push higher? No, you can't. Okay? So next, what you do see is price just tried to fill this fair value gap there. So now we are having buying and selling, which means we are still consolidating. We are just ranging. We need to see only one side of the market. But here we are just seeing every side of the market. Price filling a bullish fair value gap, price filling the bearish fair value gap here, okay, or the CB, okay, price is filling this CB here, price had just filled this BC here, where this buy side imbalances and inefficiency was filled here. So now we are ranging. Now we can't even try to actually look for entries here because we are already contradicting price. And that's why you see what happened here is price went a bit up, trying to break this and goes higher, create market structure shift, goes a bit here, trying to create this break of structure. Even this break of structure here, it's not somewhere where you can say, okay, let me just buy from this order block. No, 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 no. Don't do that. Because what do you see? We are still ranging in this swing high and swing low. This is our swing low. This is our swing high. This is our swing high. Okay? So you see, what happened is price came down, didn't respect this order block. Okay? Didn't respect this because of this. Because of this trend line. Didn't respect it. But also because this was a ranging market. Most important, this was a ranging market. Okay? That's why you see that form of liquidity sweep. Price had to sweep first this trend line for it to push price a bit higher. Again, price tries to fill this bearish fair value gap. Now you see the same thing happening. Buying and selling, just creating consolidation. You see this. This was not a good point for you. Like you are getting all opportunities. You're getting buying opportunities, you're getting selling opportunities, and you see like the market is ranging already. So this is just creating support and resistance. Okay. That's why this is not a good point for you to look for buying or selling, because every side of the markets, every participants are being offered opportunities, buying, buyers, sellers, and the market is not showing any momentum, no clear momentum here. So that's why you see what happened is price swept this and again came down and swept this. Why? Because this was already a ranging market. So we needed to sweep the swing low. Okay, swing low for us to look for any kind of entry here. And that's why you see after sweeping this swing low, price went higher and then targeted this swing high. Okay, so this means we are just ranging. And that's why I say don't trade where there is support and resistance level. It's not going to be something safe for you. That's going to be like some form of inducement. Okay, a lot of inducement are going to be created. A lot of liquidities are going to be grabbed. They're going to be taken. A lot of traps are going to be created and they're going to be taken. So they're going to sweep. So you need to be very careful. Okay. So another example of support and resistance levels is here. You see, this is a support, right? This is a support price creating this some form of support here. And you see what happened. This leg is the one that swept this. Okay, sell side liquidity. Sell side liquidity. Okay. Not a very good place for you to look for buying here. Don't wait for buy on this level. Don't wait for buy. Like if somebody is waiting for buy here on this support level, that's going to affect you. You're going to be taken out like this. See this movement. And what happened, you see, after that, after we have taken out this set side liquidity or this support level, price now went higher, created multi-structure shift there. That was a true move. Now that's the beginning of the true move. So if you are just trading support and resistance, you are already out of the market. If you try to look for resistance there, you are already out with this movement. Okay, if you are looking for support, buy from support, you are already out with this movement here. And the true move starts from here. That's why you see market structure shift here. Okay, an order block there. Price creating this very big fair value gap, the bullish fair value gap there. Price creating this tap into this fair value gap, but then price sweeping it, because I said the price leg that filled the fair value gap is not a good point for you to look for trades. Wait for it to be taken, and that's what's happened here. Price came down into this order block, and that was a true time for you to take your entry. That was the right time. Okay, see, beautiful price action, and our drawn liquidity was actually reached. So that was another example of the reason why an order block may become an inducement. You need to understand these few things. Then we have the swing highs and swing lows. This is just going to show you how we create swing highs and swing lows. You see here, we took this high, this previous high, and then price created this. But then price took this low and created this. So it means this is a swing low. This is a swing low. And this is creating the dealing range. And this is a swing high. Okay. This is how we create the dealing range. Okay. By using swing highs and lows. Okay. We create the dealing range. When I talk about the dealing range, yeah, we're talking about something that's going to actually give you like what kind of area you're going to focus on for you to take a trade. So you see, price took this swing low, and that's why we looked for a trade here. Look at this fair value gap there, and we had this order block here. Okay, entry on this fair value gap, which is also aligning, or you can say is also overlapping with this bullish order block. That was a good time to take an entry, targeting this swing high. This was our drawn liquidity. Very simple. Okay, so you need to wait for either. If the direction of buyers on the higher time frame is bullish, that's how you're going to execute, like here. Okay, but if the direction of buyers is bearish, that's you're going to focus on the swing high and look for your selling entry from that swing high area. But if it's a bullish like here, you are going to look for buys using this fair value gap overlapping with this order block. You see, the order block was a very big one here, so you may mark the 50% of it. Okay, just focus on it, because you know the order block is here. Also, you know, we have this reclaimed order block, giving you more confirmation. This is a reclaimed order block. Okay, so that was a very good example of understanding swing highs and swing lows. Another example is here. So if the higher time frame direction bias is bearish, this is what you do. You wait for price to create your swing high, but because price has to sweep buy side liquidity first, and that's how we create what? The swing high. So this is the swing high or the strong point. Okay, and then because you are bearish, you know, like, okay, then you wait for market structure shift and look for your fair value gap, because this is a momentum movement here that create the market structure shift. Look for your order block and wait for price to tap into that order block, and that's how you execute. Don't get confused with these weak order blocks like this. This is a weak order block here. This one is a very weak order block. Don't get confused. Okay, don't get confused with those kind of areas. So let me this one here. Okay, there is this is an inducement. That's why you see when price came down here, went a little bit down, but then swept it, because this was already a trap there. Okay, the true order block was this, the valid order block was this, but not here. Okay, this was not an order block. This was not a true order block. The true order block was here, because above this order block there was this fair value gap that needed to be filled, and as the price is filling the fair value gap, it taps into the order block, a premium order block. Okay, that's why we talk about premium and discount. Then you can see swing low here, was taken, and if we are bullish and price take the sell side liquidity and create this swing low, because this is a swing high, okay, you can see this is a swing high because of this, okay, some sort of sweeping here. Price swept this previous high, created another high. Now this is our swing high, and price take this low, and this is our swing low. So we look for buys. Wait for market structure shift there. Price leaving behind this fair value gap there. And we have this order block here, and that's where we're going to take our trade. And boom, price went higher, and this was our drawn liquidity. Our target, TP, take profit, okay? That's how it is. So that's how simple you can master what? You can master swing highs and understand them and understand liquidity, okay? So again, we have the trend line. So when you talk about trend line, it is something like this, trend line, something like this. What you can see here, trend line, right? Trend line again there. Okay, like we can take it from here. It's a trend line. Okay, I cannot just draw it straight because I'm using drawings here, but you can clearly see this is a trend line. We had market structure shift here. Price changing direction of bias from this, and this is our area where you're going to look for buying. Why? Because if you see here, you see this order block was already mitigated. The order block down here was already mitigated. This one. Okay, I cannot just draw it straight, but you know it's already mitigated. Fair value gap is already filled. Okay, so that's how it is. Okay, very, very nice. So you will forgive me with the noises, but just focus on this video. Just focus on understanding what I'm explaining here. Okay, don't focus on the background noises. Okay, so you see this became our good order block. Okay, and price went higher. This is a trend line that needed to be taken, and you see price took the trend line there. This is an inducement area here. Why? Because this was a fake order block. This was a fake order block. For any trader who actually thought like, okay, I can take my buy from this order block, that was going to become now a problem, sorry. Because this is an inducement. This is not a valid order block. It's not a valid order block. There is this order block down here, which is in the discount, okay? And also it's not mitigated. And also, if you look closely here, you will see we had this fair value gap that was filled a little bit, but it was not truly filled because we still had this order block down there. And that's why price came down to this order block. And that was a true move, okay? So the trend line, this trend line was taken, this one, and also this trend line was taken. This became the low resistance liquidity run was taken. This, okay? That's what you see. So the target was, this was our target, the drawn liquidity, or our TP was supposed to be there, okay? So again, we see another example of trend line here. You can see trend line, trend line, trend line, trend line there. That's a trend line, okay? So this is also a low resistance liquidity run. We expect price to actually disrespect this. That's why you see we had this bearish order block that was respected. We had this inducement here that was taken. This is an inducement. It's a fake order block. You're going to be trapped with this order block here. Why? Because you think this is the true area for you to take a buy. So you may take an entry from this. You see this? Somebody took a sell from there, expecting price to go lower. But what happened is price swept it with this. But still, we didn't fill this fair value gap, and we didn't tap into this bearish order block. Okay, that's why you see this movement here, the one that tapped into the bearish order block. That was the best time for you to look for what? To look for sales. That's why you see after here, we had a very strong move to the downside to our draw on liquidity, okay, to our TP. Okay, very, very simple. Other examples of trend line, I've already explained. You can see this trend line here. This is a low resistance liquidity run, okay, and you see order block was down here, fair value gap, price leg that filled the fair value gap is this. Expect this to be taken because this becomes your inducement now. Okay, this is an inducement. That's why price came down, swept this, and tapped into this bullish order block. And you see, we had a little bit of liquidity to be here. It can happen, but you are supposed to make sure you put your stop loss with few pips below the zone. Okay, don't just have a very tight stop loss. Don't look for high risk to reward ratio. Don't look for 1 to 10 risk to reward ratio. That's going to help you. Make sure you put your stop loss somewhere where there is enough room for the trade to breathe. Okay, if you miss this trade here, you can wait for market structure shift there, and this is your order block. Wait for price to come into this order block, and that's going to be your trade. You're going to buy. Boom, you go high. They draw on liquidity. Right? Simple. Okay. Another example of trend lines, you can see the trend lines. They are being disrespected. All of them you see. We have this one again, trend line. We have this one again, trend line. All of them being disrespected. You see here, price didn't respect it, swept it. And maybe you can say it was because of this order block. So price swept this trend line. But remember the direction of buyers.